And welcome. This is Mary Ellen McGonagle with your weekly MEM Edge show, brought to you each and every Friday afternoon. And this is the show where we put you in front of where the action is in the broader markets and what a difference a week makes. Last Friday, we were on a bullish note, but we end it with quite a bit in the way of distribution. Not so this week, so lots to get to. As usual, we are going to go ahead and take a look at where the current markets are, what we can anticipate going forward, all with an eye toward helping set you up for success, not only for the next week, but beyond. And then beyond that, we are going to go ahead and take a look at how you can use daily moves in the market to potentially gauge shifts that are taking place. And this is something for those traders that are a bit more active, but it really can be quite powerful. Particularly during this lockdown period, you may have more time to put into your efforts and it will pay off. Another item that we'll go ahead and review today is the art of trading gaps up in stocks. Today alone, 75 stocks gapped up on the open, and it really is a significant occurrence, and it can be in these stocks. We'll take a look at the characteristics that you want to be on the prowl for that would indicate potential more upside. And then also there is a lot of talk. For those of you that follow the news closely, you may have seen it, but there are experts that are calling for what is called a paradigm shift as far as the way basic industries, basic occurrences are going to be structured going forward. And by that, I do mean in the way of online sales, work at home, and also distance learning. There is an anticipation that beyond the lockdown phase, we will see at least a partial continuation of many of these systems. And that is, in fact, one of the themes that we are seeing this week as far as the really powerful areas of the market. So we'll take a look at that as well. So let's go ahead and jump right in. We are taking a look here at a daily chart of the S&P 500. And what I've done here is overlaid some simple moving averages, and this can be really quite powerful as far as giving you a sense of where the markets are. Are we in a period of a bullish uptrend or not? Now, of course, we can go back to prior to that bear market and see really what a bullish phase looks like when we are really on top of things, and that is the broader markets finding support at an upward trending 10-day simple moving average. Now, of course, we are currently in a recovery phase from this bear market drop. However, we can still use this short-term 10-day as a very significant guide going forward. And in fact, we are finding support at an upward trending 10-day simple moving average. We are currently in a bullish uptrend. And from here, we are going to want to pay attention to how the S&P 500 behaves at this blue 200-day simple moving average. This is the next area of possible upside resistance at 3,000. But by and large, we are currently in an uptrend. We have this RSI that is positive. I'm going to go ahead and add the stochastics. They are another momentum indicator. They do tend to be faster. Stochastics are a signal that tend to come a bit earlier, certainly than that MACD, and we want the stochastics to be up above this net neutral 50, and we are in fact experiencing that. So all systems go currently as far as participating potentially in this market. Now, I do want to take a look at the leading index in the markets currently, and for those of you that follow this show, you'll know we've been all about taking a close look at the NASDAQ. The NASDAQ has clearly been a leadership area. Certainly this week, it's up almost 6% for the week. That compares to a 3.4% advance in the S&P 500. But more importantly, currently looking at some of these simple moving averages, the price of the NASDAQ relative, indeed very much in an uptrend, but the NASDAQ has been able to break back above these simple moving averages, which are and can act as areas of resistance. So we are well above. This gives and affords this NASDAQ the ability to trade higher. Of course, there is overhead potentially in this area as far as buyers that got in here that may look to get out, but for the most part, the NASDAQ is quite clearly the strongest among these indexes. We also have that RSI that's positive as well as the stochastics. And I wanted to point out one other thing, and that is the fact that this red 50-day simple moving average is currently leveling off. And the relevance there is that as this 50-day simple moving average levels off potentially and ideally, we want this moving average to begin to trend upward again with an eye toward taking us to a confirmed bullish uptrend when we have each of these moving averages trending upward. So that's quite bullish. It is a sign for intermediate as far as the uptrend in the intermediate term also bullishly in place. Let's go ahead and drill down beyond the broader markets. We do this each week where we look at the underlying sectors in the S&P 500. We want to get our arms around where that strength is with an eye toward participating in that strength, identifying stocks poised to outperform. So we do have each of the 11 sectors as well as the S&P 500. Gone ahead, actually I'm going to do it now, put the RSI, that relative strength indicator, sort these ETFs, sector ETFs by strength, and we can see up here in the forefront XLC. This is communication services. I'll just go ahead and blow this up quite quickly, and we can see that just this week it has joined healthcare and technology as far as being in a bullish position above this 200-day, which had been acting as resistance. So communication services, all about internet services. Facebook is a big performer there. Google, of course, another big name. Lots of other names in communication services that are helping to not only keep people connected, but also keep them entertained. So that's your XLC. Technology, no surprise up here in the forefront. This particular sector up 6.5% this week. And this too is all about connectivity, that concept of this paradigm shift that may extend beyond this lockdown period that for the most part we are still in. And then from there, consumer discretionary, this is worthy of blowing up. Consumer discretionary was up 4.5% this week, and we are just now again poised to break up positively. But we do have other outlying signals that are pointing to bullish action. This has everything to do with economies reopening, the optimism among investors that some of these retailers are going to make their way back. So that is XLY, and we will in the next segment go ahead and point out a particular area in XLY that is far and away the strongest. Energy having a superior week this week. This is another theme we're just going to take a quick peek at, but we did point this out last week, the fact that it has turned constructive, quite bullish as far as this XLE trading above these simple moving averages with an eye toward a significant potential advance up to this next area of resistance. We're going to take a look at getting your arms around that energy potential move. And then from here, we can see other areas that are continuing to languish. And interestingly, despite the fact that biotechs were up 6% this week, healthcare is by and large sitting out. It was a big winner earlier, and it's not unexpected to see when you have these big explosive moves, a period of potential consolidation. A lot of this is those big pharma stocks. We can just, while we're here, pull up a name as an example, Eli Lilly. Big out of the gate name, just consolidating, very, very standard, nothing to be alarmed about. So that is healthcare. And then one other area that I did want to point out to you here is financials also, despite being up only 1%, it's trying to turn bullish, but a lot of really resistance there. These banks are not out of the woods yet as far as loan loss reserves, and so forth. And then we've talked in the past about real estate and utilities suffering from the lockdown and people now staying at home, commercial utility usage down, and potential commercial REIT and rent diminishing. So that is the sectors. We can then now drill down and take a look at some of these other sub-industry groupings that I identified. And for those of you not familiar with my work, many years I was with William O'Neill and Company, founder of Investors Business Daily. And during that time, I worked with top portfolio managers for 15 years around the globe. The point here is that my focus is on these bigger growth stocks, these names that really outperform the broader market. So within this grouping, I do have those biotech group. IGV is one of the growthier software ETFs, the semiconductors, and then also I did add another group this week, XRT, which is currently the strongest area within the consumer discretionary. So I'm going to go ahead and update this, and let's take a look up here. And for those of you again that follow the show, you know we've been all about software stocks. Take a look. This is that IGV ETF, and it's up 9% on the week. Microsoft, of course, is a big player in here, but that stock was up, dare I say, only 5.6%. There have been some super big outperformers, and you guys out there that subscribe to my MEM Edge list, you'll know all about these names that were up 14 to 21% this week. Big growers that are keeping people connected. A lot of this is cloud computing as well as online shopping. Retail is another big area within the software space. And so as we continue to move on, going into areas of weakness, we do want to see weakness in volatility. Take a look. We've dropped now below that 30 into 28 on the VIX, and this is good news. As we see volatility continue to subside, we can anticipate that the broader markets, we can go back here to that period when we were looking at the S&P was in a confirmed uptrend. It was all about this fall into the bear market, quite a bit lower on the volatility, but certainly we're heading in the right direction. So that is good news, and that is the broader markets. So from here, I did mention ways that you can use intraday action, and we're going to use StockCharts.com to get a sense of where money flows may be positioning. And I think you'll really find this helpful, because what I did is I went ahead and actually I'm going to start with the first initial interface page to show you where I'm retrieving this. Quite simply, it's market movers, S&P 500, the percent up. I want to see those stocks that are up the most. So what I did yesterday is save that. I freeze framed it from yesterday to see not only what was occurring on Thursday, but also looking for continuation rallies into the following day to see if there was sustainability within those moves. So these are the names that were up big yesterday, and actually it's a little, this is a daily price chart, 2-month, but daily, so we can see those names that actually were able to have these continuation rallies beyond their initial significant moves. So let's take a look. I'm just going to point out a couple of themes that were brought to my attention with this. So here we are, we're taking a look at one of the stocks that had a significant move yesterday and was continuing able to add to that advance. This is Lincoln National. LNC is the ticker symbol. It's up another 5% today. And thematically, I wanted to point out a couple of items that were consistent among those stocks that were up yesterday and were able to carry on. One item is the fact that the company did report earnings yesterday. They beat earnings. They also came out, JP Morgan raised their price target to 100% above where the stock price is currently. But more importantly, the stock, this was a theme. I'm going to show you another insurance stock that also is experiencing these types of big dual day moves, because what is happening is there's a sense that the COVID-19 may be behind us as far as the big bulk of damage that may occur among these insurance. This is a life insurance stock. But another characteristic that I like is the fact that this stock has broken up above key support. It's poised to break out of this big base, and we did get big volume yesterday. So let's go ahead and take a look at another stock from yesterday, and this is again where you are able to potentially capitalize on themes. AIG, another big insurance company, and this stock was profitable despite COVID-19. The company sees no long-term reduction in their returns. Both of these stocks have very significant yields. AIG 4.9, LNC 4.6, that was another commonality. But we can see today with an add-on, the stock is up 8.4%, but it's now up above this 50-day simple moving average. We're looking at a daily price chart. The RSI is positive. MACD just poised to turn positive, so a potential continued advance. So thematically, insurance. We can also take a look. There are two names in here that are also energy related. This is Baker Hughes, BKR. We can see the stock was up in addition to yesterday, up 7%. So this is that move that I talked about into energy, with the entire group being up 8.1%, as what's happening is output among these oil producers is being reduced, and they're coming out with good numbers. So let's take a look at today's up in price on that S&P 500, and we can very quickly see a number of energy names in here. This is Noble. I talked about this earlier this week when I did the 5 in 10 minute series, and we can see the stock is up 13% today. They came out with very good numbers, beat estimates. The stock has a $19 price target. It's currently trading at $10. So this is one way to really get in front of potential themes. So for the most part, what we did see was energy and a potential move into insurance. There is still a lot of people not quite believing in it, but certainly worthy of looking at. Viacom was another stock that was up on Thursday and added 10% to that gain today. Another one, surge in earnings. They're seeing streaming viewers pick up significantly. They just closed a deal with YouTube as well as Google, and another stock, 5.7% yield. So we're seeing a lot in the way of bottom fishing here with some of these companies. These are not the standard up and out types of names, but again, a way for you to potentially participate and get in front of some of these themes that are beginning to emerge. Now, I do want to, after the break, we're going to take a brief period here. We're going to take a look at that gaps up. As I mentioned, 75 stocks gapped up. How do you respond subsequent to that gap up on the open? We'll be right back. During every bull market, there are a select set of stocks that far outpace their peers. They trade much higher and much faster than the rest of the markets. The reason? These select stocks have a set of characteristics that history has proven are common among big winning stocks. My easy-to-follow course will teach you the skills of a lifetime, so you can learn how to uncover and then successfully trade these fast-moving stocks. Take my 5-part course now by going to meminvestmentresearch.com for this limited time offer. And we are back. I'm going to begin this segment by sharing with you two examples. Both of these are stocks that I'm very familiar with. They do have high growth profiles, but they also had recently significant gaps up in price because of very strong earnings. This is West Pharmaceuticals, WST. We're looking at a daily price chart, and what I did want to point out to you is one of several common occurrences that may occur after a stock gaps up very significantly on earnings. The first thing you want to key in on are the volume characteristics. When you see these gaps up in price on strong volume, oftentimes it will. In this case with West, we did have several subsequent up days, but more importantly, the stock will pull back to this upward trending 10-day simple moving average. Now, what I did want to point out to you is another significant occurrence, and that is this stock upon its breakout, it broke out above this breakout buy point, which is 176. So when we see a stock that gaps up and breaks out of a base, you can in fact up to 5% beyond that 176 base breakout, you're still in a buy zone. But beyond that, you are chasing the stock. So anyone that may have bought the following 2 days, you would be in essence buying a stock that's extended, because in fact we did have a nice pullback to that 185. So just as a point of reference, this base breakout from 176 to 185 is 5%. Hopefully this is all connecting, because what I'm trying to point out to you is, for the most part, even in a strong bull phase, you're not paid to chase these stocks. Oftentimes you will get a consolidated pullback and an opportunity to re-enter. Let's take a look at another more recent example. These guys reported this week, CHGG, and they are all about providing an online platform for distance learning for students. Another one where we have this huge gap up, and it was on very strong earnings. Take a look at this volume, just really explosive, telling you that buyers want in. That's one of the key characteristics. It also had this base breakout. Now, when we see this really explosive strength similar to this, it's really going to pay for you to drill down. This is what I've been telling MEM Edge subscribers for select stocks. When you are paid to drill down into a shorter term frame, and for a lot of people there might not be a real comfort level or familiarity, but I'll tell you, we are in a very unique phase in the markets. We are seeing these big gaps up and potential subsequent moves. So let's take a look at this gap up that we did see on Chegg on the earnings, and I'll share with you what you can be on the lookout for with a 5-minute chart. The stock gapped up 23% on the open, and what you want to key in on and look out for is this is that gap up, this black bar. When the price, using this 5-minute chart, surpasses the high of that 5-minute first bar, that is a buy signal in these faster stocks that have those big volume characteristics that I mentioned to you. And we can see the stock actually did advance quite a bit more, because oftentimes you think it's up 23%. The move is over, but this particular stock went up as high as 39% on the day. It closed the day up 32%, but this is that nice move up on Chegg. Let's take a look at some other examples, because I mentioned 75 stocks did gap up today, and we're going to take a look at 2 names from today, and then I'll share with you 2 names that look constructive from today's gaps up and why, and 2 names that potentially do not. This first one is Zillow. We're going to look at a daily chart here, and this is the gap up today, and the company actually closed the stock up 9% on the day, and we can see, look at this huge volume, very, very significant, very constructive. They are calling for suppressed sales of new homes to take place once lockdown starts to go back to opening up in various economies. And we're going to take a look at an intraday, again, that 5-minute, so I can share with you the dynamics to be on the lookout for those investors that are inclined to be a bit more active. You want to take advantage of some of these moves. So this is the 5-minute gap up today on the open, and what we can see is it gapped up actually 9% on the day, but it did get up as high as 15%. But again, keying in on that action, we can see it reached a high on that first 5-minute bar, pulled back, and it's not until about five other 5-minute bars that you would be well served to enter the stock. When it surpasses that first 5-minute high, that is an entry point. And then from there, we can see the stock did advance quite significantly. I do have time to share with you a couple of names that did gap up, but really kind of faltered. And I'll share with you some of the reasons why. GMED, and I didn't mention this, you want to make sure of a couple of dynamics. Let's go ahead and look at it daily on GMED. They reported earnings today. They did have this gap up, and they were up 4%, very respectable, but they are finding resistance on this daily chart at the 200-day simple moving average. So when you are looking at screens of stocks that have gapped up, ideally on earnings, you want to make sure that they are positioned technically up above any possible areas of resistance. We can look at RPD, and that also is finding resistance at that 200-day simple moving average. And that is how to play these gaps up that are occurring rather frequently here in a robust earnings season where we're seeing numbers coming out quite constructively. Let's take a look at the semiconductor index, because I did want to point out this area. It is another high growth area. I talked about that potential paradigm shift that is occurring, where connectivity is important, cloud computing, keeping people connected, and all of that is being pushed forward with a lot of these semiconductor chip. They are a very, very essential component. And what you'll want to do is quite simply take a look at those stocks that are involved in 5G. MPWR is an example. NVDA is another very healthy, strong stock that is data center related. So that's one area I would urge you to take time to examine. And also take time, if you will, to trial my MEM Edge report. It will get more into those types of stocks. You can take advantage of my offer by using the link below. Have a great weekend.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.